let me also bring on board Renu Pogalia, who's the analyst with IIFL Capital on the sidelines of the IIFL conference. Renu, great having you. In terms of the Capex cycle pickup, we've seen signs of it, but are the signs strong enough for it to indicate a multi-year pickup is what I'm trying to get to. And do valuations largely factor in at least the near-term pickup that we're seeing?
Multi-year pickup we need to assess because there are different variables here, but definitely coming from the bottom where private sector investments are fairly soft and muted for the last 4 to 5 quarters. We have started to see companies talk about some green shoots, markets bottoming out, and which is where we expect there will be some pickup in private sector investment momentum. We are hearing Capex coming back on the metal sector. Data centers is a strong area. Power generation, building and factories, again is seeing private sector investments picking up there. So definitely green shoots are holding up well, and it seems like in the next 2 quarters we expect the momentum to pick up. So in the near term, yes, the tailwinds are pretty strong. The multi-year cycle will depend on how it is complemented with government reforms, initiatives in power space, and the rest of the environment pans out. So which is where it is. Valuations for the sector, it has always been at the top end of the quartile. They did correct over the last 9 months, but I would say in the last 3 to 4 weeks around the earnings season when the positive commentary started to kick in, valuations have definitely bounced back again. But at least I would say the stocks look investable now, which looked relatively stretched 18 months earlier.
Renu, hi, Ajit here. You have data center investments which has been announced in the US, nearly 600 odd billion in the last quarter. In India AIS Summit, we have seen investments of nearly $227 billion. That all will lead to a high demand for chips, especially memory chips which is there. Do you think there is a big constraint coming in for the domestic electronics and EMS players going forward?
The global demand for AI products and data centers have stretched the value chain for electronics, and clearly memory chips, DRAM and HDDs have been feeling the heat, not just India, globally. So as a result, we have seen almost 120% increase in the prices over the last 12 months, and supply chains are stretched. So it will put some pressure on the EMS and the electronics value chain. But I would say the diversified EMS companies have their supplies lined up. So to that extent, availability of chips may not be as much of a constraint for them than the price. And more than the EMS space, I would say the consumer electronics OEMs on mobile phones, laptops, especially those operating in the value segment, will struggle to survive the category itself, because there the inflation impact on the final product is almost between 25 to 30%. And the category itself is under threat. So which is where we need to see how that segment of the market survives through this cycle, cyclical, I would say, demand supply gaps. But otherwise, we don't see it as a material concern for the EMS or electronic manufacturers here in India on the EMS segment as value chain perspective.
And how do you look at profitability from that point of view? Given that many of them have high expansion plans also in play, some of them have PLIs which are undergoing, and they're looking for a second PLI as well. Do you see the margin getting stretched for many of them in this market, especially the EMS players?
Not really, because EMS mostly operate on a conversion cost basis, so we don't see the margins getting compressed. Optically, percentages may look slightly softer because the BOM increase is there. But overall, the way it looks like is on the margin side, relatively less impacted. Even if you say products like cameras, IP cameras, where SoC and memory modules are almost a third of the cost structure. Even in that segment of category, players like Aditya Infotech have been able to take price hike because of the demand supply dynamics and very limited players being there in the market. So even for them, we have not seen margin pressures being as significant or severe as it was anticipated by investors. So I would say the margin pressure around this value chain stretch is sitting with the OEMs or the brands, where they are looking at means and ways to cut on the specs reduce the cost structures, reduce the marketing and O&M spend, and just remain at the base of the market. For EMS companies who are essentially contract manufacturers, there it's more on conversion cost, and we don't see them being negatively impacted on the profitability of margins because of the steep inflationary pressures coming on the memory chip or module prices front.
Renu, probably a very, very basic question, but with regard to the data center play in India, is it best to buy data center companies itself or companies investing in data center itself? I know that there are no pure play companies in that space, but companies investing in that space, how sticky is the business? I'm trying to understand how you as the analyst looks at this. Or is it better to play some of the ancillaries, say heat exchangers and the like?
So data center definitely is a very fast growing segment in market, different operators. If you look at asset owners or data center developers, service providers, they are one part of the value chain. That is a segment where we are not seeing sharp demand supply mismatches or issues. It's all about capital availability. People who have funds are able to do that. But where the demand supply mismatches are very severe is on the value chain or the supply chain, which is required on the data centers, be it on the electronics part, the electrical equipment, gensets, transformers, switch gears, cooling solution systems. So the value creation for investors would be sitting on the equipment side of the portfolio or the supply chain part of the data centers than the asset itself in our view. Asset also is a good opportunity there. It has its own dynamics, but the steep mismatches that we see on the demand supply side, not just India, but globally that's been the case, which is where we see investors and valuations liquidity will be chasing those companies and equipment here. So be it on the genset side, where within the listed space, Cummins has a predominant market share. If you look on the electrical equipment side, the entire value chain for companies doing transformers, substation automation, they are beneficiaries. HVAC cooling solutions is a significant portion of it. And there is a big shift when you move from normal co-location to hyperscalers. So companies traditionally who have been there on chillers and importing equipment are the beneficiaries. Local supply chain partners will benefit out of it. And also if you look at emerging segment like liquid cooling required for servers, that is where we will see new companies emerging. Recently LG, which was yesterday at a conference, they highlighted of potential discussions by their parent with the large hyperscalers for potential orders for liquid cooling solutions for data centers. So to that extent, I would say the equipment part of the business today is far favorably placed than the asset owner or developer themselves.
I'm trying to understand, Renu, how recurring is this? And I'll probably couple a couple of questions together and try and roll it into one. You also cover consumer electricals. Copper prices have been elevated, but we're seeing the likes of a Polycab, a KEI hit 52-week highs. We're also on balance seeing that probably recurring demand for a Polycab KEI may not be existing, especially given data centers is just a one-time setup cost. Am I thinking incorrectly? Is there a different view? How should one look at the benefits which accrue? They'll accrue over maybe the next 5 to 7 years, but where's the next leg of growth likely to come from, in your opinion, for some of these plays?
Sure. So I probably don't agree with you. Firstly, if you look at the data center segment itself, the average size of data centers in India, which were getting awarded till now, were typically 20-30 megawatt size. Now the projects which are in RFP stages or which are under discussion for construction are coming anywhere between 80 megawatt to 100 megawatt ticket sizes, which is significantly larger. And if you look at the pipeline of projects, on an installed base of about 1.6 gigawatt of data centers, we have about 300 megawatt which is under construction. But more interestingly, the pipeline of near-term projects on the data center side is close to about 1.5 gigawatt, which will all be getting awarded in the next 2.5 years. So which is where we see it's not just a one-time demand. The segment or the market itself is long drawn in terms of the visibility. It's a matter of time how that volume unfolds in terms of the domestic market with respect to opportunity for companies on the end market perspective. So be it cables and wires companies like KEI, Polycab.
20 years.